Economists expect New Zealand's share market to slip when it opens in a couple of hours after significant drops on the Australian and US markets. The Australian market dropped to its lowest level in almost 7 months yesterday, shedding $22.7 billion in value. Stocks on Wall Street fell by more than 2% on Friday, erasing all of the market's gains for the year so far. And overnight there's been little gain for the US share market. Craig McCulloch reports.
The BNZ's chief economist, Tony Alexander, says it's almost guaranteed investors will start selling off New Zealand stocks this morning. He says that in itself's not too concerning, but the reasons behind it are.
A number of things have happened fairly much all at once. We've had the deterioration in the Spanish banking situation, an increasing probability that the Greeks will be thrown out of the euro. We've just had much weaker than expected employment data out of the United States and manufacturing data out of China. So there's a lot of negative stuff happening all at once. People are reassessing their outlook for the world economy, business profitability. That means share markets go down.
He says retail figures are likely to stay flat as New Zealanders become more wary about taking on debt. Mr Alexander says export commodity prices will also fall.
It means mainly for us in New Zealand a weak external trading environment, but it doesn't yet imply recession in our economy, given that domestic stimulus from the rebuilding of Christchurch in particular, and also because there is underlying long-term structural increased demand for our primary products coming from those emerging economies like China.
The head of Massey University's Centre for Banking Studies, David Tripe, says investors are leaving the market in anticipation of a dismal future.
What's happening globally is not good for the New Zealand economy because we have some significant dependence on export markets, and people in our export markets, though they've got share market falls, they're not going to be as willing to spend as they might be otherwise.
The ANZ's National Bank's chief economist, Cameron Bagrie, says to some extent New Zealand's cushioned from the financial crisis abroad.
There's some great shock absorbers that are stepping up to the plate for New Zealand. The New Zealand dollar's fallen a long way over the past month, and what that tells us is the important buffering supported action that New Zealand dollars is helping to support this economy.
Macquarie private wealth advisor Brad Gordon says yesterday's public holiday gave investors an extra day to consider any action. He says he thinks investors are overreacting to the global situation, but says there's no easy solution.
What's happening in the Eurozone, there is no big magic potion that's going to fix this. It's going to take time. We need to see some of the other emerging economies come out with stronger data. That hasn't provided any offset as yet. 2 or 3 catalysts probably later this month may help.
The NZX will open for normal trading at 10 this morning. For Morning Report, Craig McCulloch.